Weakness continues on the street with the Nifty falling below the 26,200 mark even as broader indices trade off session lows. Oil and gas is the biggest culprit thanks to Reliance even as pharma and metals lend support. And speaking of Reliance Industries is under severe pressure, marking its biggest intraday fall since June 2024 and eroding over 1 lakh crore in market value. The company said it hasn't received Russian crude in weeks and doesn't expect any in January. Analysts warn the loss of discounted oil could pressure refining margins. Trend sulks after standalone revenue growth slows to 17% year-on-year, the weakest pace since 2021, even as store additions stayed strong and management reaffirmed its 25% growth aspiration. Dabur, meanwhile, flagged early demand recovery post-GST cuts with rural traction improving. And more BFSI Q3 updates. Kotak has reported healthy sequential loan growth. Axis maintained strong growth on a high base, while IndusInd remained an underperformer. L&T Finance saw strong retail disbursement momentum led by gold loans. JLR's Q3 performance was hit by a cyber incident and production disruptions, with operations normalizing only by mid-November. Wholesale volumes fell over 43% year-on-year, while retail sales dropped 25%, with weakness across major markets including the US, Europe and China. Hi there, good afternoon. You're watching Closing Trades on ET Now. I am Snehi Shah. With me on the show is Harsh Saita. And well, we're going to be tracking the last lap of the market in this show. So let's take a look at what the market is doing right now. 26,170 thereabouts is where we are at on the Nifty. Only a very slight recovery from the day's low, but we are just about there, a 0.3% cut on the Nifty and now below the 26,200 mark. Sensex too, the cuts have intensified here, a 0.5% cut coming in on the Sensex. Nifty Bank, however, continues to be resilient, a 0.2% uptick being seen on the Nifty Bank right now. India VIX up by about 1.5%, so that spike is also held. You have Apollo, that's higher by about 3.5%. Apollo Hospital is the top Nifty 50 gainer. ICICI Bank following that, another almost 3% uptick over there. HDFC Life, the insurance stock, doing very well for itself, 2.3% higher. Bajaj Auto, Tata Consumer, SBI, Sun Pharma, Hindalco, HUL and SBI Life. These are the names in the Nifty 50 group of stocks that are trading with gains of in excess of 1.5%. And these seem to be holding the index together, which is why we're seeing a cut of only 0.3%. And why I say only 0.3% is because look at a trend, an 8% cut coming in the top Nifty loser, 8% slash on trend, 4.5% cut on Reliance, massively low levels on Reliance today. ITC is lower by 3%, Kotak, Interglobe, Power Grid, HDFC Bank. All of these big contributors to the index move are lower by about 1 to 2% each. So that is the reason why the index is largely under pressure. But yes, Apollo, ICICI Bank, HDFC Life trying to do some of the heavy lifting over there. Sectorally, it's the day of the metal stocks once again, given that copper, LME copper has reached an all-time high. So metal stocks were doing well. Nalco, Hindalco, Hindustan Zinc, Hindustan Copper, all of these have been holding on to very fair gains. Nifty Pharma, however, has seen a very good move with DV's Lab, positive brokerage note over there. Ipca Labs, Lupin, Aurobindo Pharma doing well. IT stocks are doing well today after a steep sell-off yesterday. So Persistent, TCS, HCL Tech, all of them doing well. Select banking names like ICICI, IndusInd, SBI, they're all doing well. What's under pressure today is the energy group of stocks. You have FMCG and realty. They were doing well yesterday, but slight profit taking being seen today. So that is what the market breadth is looking like right now. But let's take it across to my colleague Rabinder, who brings us all the stocks that are buzzing in trade and where all the action is today. Rabinder.
Well, it's on the back of strong Q3 FY26 business update. MOIL is in focus, where company has achieved its best ever production in the FY26 with Q3 output at 4.77 lakh tons, which is up more than 3.5% year-on-year basis, and growth is aided by the improved mine planning and the operational efficiency. So back of this, stock is up more than 3.5%. KSH International is also in focus on the back of the strong Q3 update, where in Q3 the company's revenue saw an uptick of more than 50% year-on-year year basis at rupees 712 crore, and PAT also saw a jump of more than 129% year on year basis, and the annual capacity has increased to 41,045 metric ton with the phase 1 of Supa facility operation. So back of this, KSH International is in focus, and the stock is up around 4 to 5%. And if we talk about some of the stock that is in focus on the back of the action in the commodity market is Hindustan Copper and Hindalco. Both the stock is in focus, where LME Copper is trading at a record high and crosses it $13,000 per ton for the first time ever. So back of this, both the stock is in focus, and Nalco is also in buzzing, where aluminum price in the global markets are trading at the highest level in over 3 years, with the price on LME crossing the mark of $3,000 per ton for the first time since 2020 earlier this month. So back of this, Nalco is also in focus, and the stock is up more than 5 to 6%. Eternal is also is under pressure on the back of block deal, where 42.3 lakh share traded in a block deal. So back of this, Eternal is also under pressure. And if we talk about some of the stock that is in action on the back of the brokerage note, first is the Bajaj Auto, where MK has come out with the note, and they have upgraded the stock to buy from the ad and hike target price rupees 11,100 as compared to earlier target price of rupees 9,500. They say that the domestic two-wheeler share of the company is at a lowest, and signs of pickups in the premium motorcycle and electric two-wheeler is seeing, and Bajaj Auto has overtakes M&M in electric three-wheelers, and a gradual turnaround in KTM provides an incremental the potential upside for the company. Divis is also in focus on the back of the positive brokerage note, where Citi has maintained the buy rating with target price rupees 9,140. They say that the 2026 can be an inflection year for the Divis, and company has a strong pipeline catalyst over the next 12 months. So back of this, Divis is in focus, and the stock is up around 4%. MV Photovoltaic Power is also in focus on the back of the positive brokerage note, where Jefferies has initiated coverage with buy rating and target price rupees 320. So back of this stock is also in focus. And lastly, ITC is under pressure, where Citi has downgraded the stock to sell from the buy rating and cut target price rupees 320 as compared to earlier target price rupees 500. They say that the ITC will require a price hike of more than 30% to offset the tax increase on the cigarette. So back of this, ITC is under pressure.
Thank you so much for that, Ravinder, and for giving us those crucial updates. Kunal, let me come to you with regard to Reliance Industries. On charts, what has changed?
I think, of course, the price trajectory has changed for Reliance Industries after this 4% cut and more like a 100-point drop from yesterday's high, 1610, thereabouts now 1500. It's changed the course of the stock price in the very immediate term, but I'm not sure whether the stock would probably see a more follow-through on an immediate basis. After a more like a 7-8% drop into the stock price, you would want that the stock just balances out for the next couple of days at least, before there is any clarification in terms of the news flow, etc., which could probably course the next chart the next course of direction for Reliance Industries. But I would expect that at least for the next couple of days, this selling should halt.
So selling will halt, you're saying. So 1500 is the base.
1500 would now be a pivot. So the stock price will just about hang around to that kind of a zone, unless there is any kind of a negative news flow which comes in back again for the stock price.
And what if it were to breach 1500 on the downside?
See, it will break 1500, but then it will not break it meaningfully.
Okay.
So the price correction the last 2 days, yesterday it opened up 1610, went down to 1550, 1570 thereabouts. So 40-point drop. Today it's an 80-point drop for the stock price. I don't expect a more far higher sell-off into the stock price going further, at least for the next couple of days, and neither a major magnitude in terms of the percentage impact.
Yeah, so that makes sense. And therefore, if one were a trader, this is a very good time to buy, you'd say. Downside risks limited, upside possibilities maybe in the next 10 to 15 days? No,
not really, Harsh, okay. Because you don't buy it just at the first instance the stock price is at a correction, because there is an overhang of selling which is still there.
Sure.
Whether it gets lifted immediately, whether it gets lifted after the next few weeks, that's something which the markets would want to wait. So the positioning will be a little bit more lighter. So maybe at 1600, the positioning would have been more heavier. Now the leverage positions would have been out, the positioning would have been lighter now. And maybe over the next couple of days, there could probably be an opportunity where traders would start looking at Reliance Industries as a better bet.
You want to keep your eye out on what Kunal says because you could be at an inflection point at some point in the next few days where Reliance Industries is concerned. See.
And in fact, while we're talking of Reliance, let's take it across to Ashesha to understand what is ailing Reliance today. What has been the news flow that's led to a cut of about 5% on Reliance? Because I don't remember the last time we've seen such a steep cut. Ashesha, what is happening with the stock today?
Well, yes, it's the biggest fall that we have seen since the 4th of June 2024. It has hit an intraday low that we have seen in the last 2 months, and we have seen a market cap erosion of nearly 1 lakh crore. That's the kind of move that we have seen in big boy Reliance Industries today. Now, let's put the spotlight on some recent news pieces. There are several reports which suggested that Reliance has started buying crude oil from Russia, but the company has issued a clarification. They have informed the exchanges they have not resumed buying from Russia. In fact, they say that they are not expected to receive any oil from Russia in January 2026. It was in November when the company has said that they had halted import of Russian oil for its export-oriented SEZ at Jamnagar, and company has not received any Russian oil in the last 3 weeks. That's a clarification that the management has come up with. Now, I'll tell you why this is important. Remember, Russia supplies crude oil to India at a discounted price, and if Reliance Industries is not buying oil from Russia, it is not enjoying the benefit of $5 to $6 per barrel, which it was enjoying when it bought oil from Russia. This will directly have an impact on companies' margins and profitability. Gross refining margins as a result of this will be impacted, and if at all the company resumes buying oil from Russia, that of course will be a positive for the company's profitability going forward. Now let's also put the spotlight on some risks that the company faces at this point in time. One, of course, is on account of sanctions and trade restrictions, which could have an impact on sourcing of oil by Reliance Industries from global players. Delay in telecom tariff hikes. Although the expectation is that the telecom industry, led by Reliance Jio, will undertake a price hike to the tune of 15 to 20% before Reliance Jio gets listed. But there is always a risk which the industry is perhaps factoring in. Higher capex and long gestation period could delay returns from solar and battery. Remember, they have invested a lot for their solar business, and if at all there is any kind of delay on that front, that also continues to weigh heavy on the stock. Large ongoing investments across business is likely to weigh heavy on their cash flow going forward. But yes, for now, one of course is the fact that they are not expected to resume buying oil from Russia, which is likely to have an impact on gross refining margins of the company going forward, and that is precisely the reason the stock is down nearly 5% in trade today.
Well, that's a deep gash, frankly, with regard to Reliance, and what it's also doing, Kunal, is pulling down the Nifty by 122 points. That is a fair margin in terms of the Nifty move versus what Reliance is doing single-handedly on the Nifty. And I'll quickly give you a summary, a snapshot of that. Currently, the index is down 120 points. Out of that, pretty much all of that is coming from Reliance alone. So just a 0% there will likely mean that you have actually Nifty trading in the green, likely. And Nifty IT has actually done that. Nifty mid cap and small cap also looking slightly weaker in terms of the trade today. But Nifty IT was your trade in the morning. You said, or rather, it wasn't your trade of the morning, if I can call it that. But you were positive with regard to IT, and that's exactly how it's played out. Stocks within that basket.
See, now actually what could happen, Harsh, is on an overall macro call, if Reliance, HDFC Bank, Trend, such other names, and ITC, I think over the last 1 week or so, there have been 4-5 major large caps which have seen a big kind of a correction, to speak so, because big in terms of weightage as well as the price damage these stocks have shown. It would take a lot of working from the other stocks, the other set of the Nifty 50 stocks, to try and compensate this kind of a loss. So, for example, today, just to put it into context, with Reliance Industries down 110 odd points, contribution in terms of the Nifty and HDFC Bank negative 50 odd points, you have ICICI Bank and SBI trying to offset a major part of those losses, 50 points and 25 points respectively. So that's the kind of a work which I believe sector-wise also could happen. So now, for example, the IT stocks, which was one of the underperforming sector, they would start to be a little bit more stronger, and they would want to withstand the kind of price correction which could come back into some other sectors on the back of the large cap corrections.
Okay, so that's the take on Nifty IT. Kunal, this afternoon, where is the bias in the market right now? We've seen a little bit of a pullback on the index as well. On that note, any buying opportunities are you spotting?
Yeah, so Axis Bank is still one of the strongest private sector banking names, holding its fort at 1300-ish, kind of a zone 1290 to be precise on the spot levels. So would suggest the buy on Axis Bank with the 1330 target and stop us at 1275. And apparently the pharma sector is starting to look attractive. We've seen many stocks heading towards a breakout. Aurobindo Pharma, something which I flagged off a couple of days back, still looks attractive and it's now ripe for a breakout of a fresh bullish flag formation. So would look out for 1265 as a target for Aurobindo Pharma and stop us at 1210.
Okay, Kunal, we'll pause you there. We'll take a very, very short break. On the other side, what we'll cover is two things. One is that the FADA data has come through and very, very positive with regard to CV. The other piece is we'll speak to Kaustubh Pawaskar because stock of the day, arguably, Trent. And we'll try to understand what is playing out with regard to that counter. Stay with us. All right, welcome back, and plenty happening in terms of market moves. Let me quickly try and address FADA data first. The December data, auto sales from FADA has come through. You've seen auto retail sales up around 15 odd percent. Now the breakup. In terms of two-wheelers, the volume growth was around 10 odd percent in terms of number of units. PV retail saw very strong growth of nearly 27%. But really what is standing out for me is that CV retail growth number. It's gone up 25% on a YOY basis. Three-wheeler retail sales have gone up 36% YOY and tractor sales are also up 16%. So auto clearly on a different gear at this point. Let's pull up the auto index. Let's also look at what some of the PV and CV players are doing in terms of stock price moves, if you're seeing any. Well, no move per se on the Nifty auto, but if we can pull out some names with regard to an M&M, what that one is doing among the two-wheelers, Hero, TVS, Bajaj Auto, Maruti is up 0.5% thereabouts. So you're seeing some moves, but nothing substantial per se on any of those. M&M, of course, a beneficiary of the tractor retail sales, which have gone up by 16 odd percent. Of course, not a direct linkage to the sales numbers that they will clock, but a good lens into what it means in terms of going forward with regard to auto.
Okay, and while this is positive for some of the stocks, let's talk about the biggest fall in the market that we've seen today, and that is on Trent. By now we know it's because of the weaker than expected quarter 3 numbers. The revenue figure that they've reported is 5,220 crores, which is a 17% year-on-year growth, weaker than what the 20 to 21% year-on-year growth that the street was working with. And also remember, the management had reaffirmed in its AGM in July last year that they would like to be clocking 25% year-on-year growth in the next few quarters, the next few years. That was their guidance. And the way Trent's revenue trajectory has been, especially in the first 3 quarters so far of FY26, quarter 4 FY26 has set a very big target for Trent to achieve about 7,300 crores of revenue to be able to meet this 25% growth, which seems unlikely given that Trent has constantly been clocking in revenues between 4 and 5,500 crores. So this 7,300 crore seems like a big ask. But let's get a better deep dive on what the stock performance is, and more importantly, what this cut on the stock today means for investors going ahead and how you should be viewing it, this stock. We have Mr. Kaustubh Pawaskar, the lead analyst at ICICI Direct, joining us. Kaustubh, hi, good afternoon. Thanks for your time. First of all, wishing you and your team a very happy new year. Let's understand a little bit more about the cut that we are seeing on Trent, Kaustubh. By now, every time in the recent past, Trent has come out with a disappointing update, the stock has seen a cut. One would imagine that by now the street would have penciled in that this is not a company that will now grow at that historical 40% levels. Why such a sharp cut then once again?
Yeah, hi, good afternoon. Happy New Year to you and your team.
Thank you.
So basically in quarter 3, it was anticipation that there will be a better growth, about 20%, largely driven by the, higher festive sales. I guess on your channel only had earlier mentioned that we should expect, a normalized growth of around 18 to 20% in trend from now, because now the base is normalizing for the company. And out of that, large part of the growth will be coming from the store addition, what the company has been doing. And there will be, low to mid single digit kind of a like for like growth. Q3, however, there was some anticipation that festive season followed by the GST rate cut, the benefit out of it would see in terms of better sales. Also, Trend has done a lot of rework on their portfolio at the store level. So there was a lot of optimism that in quarter three at least growth will be little better, and then there will be a normalized growth of around 18 to 20%. But the growth of 17% was below than what we and Street were anticipating for the quarter.
Kaustubh, hi, this is Harsh here. So you were penciling in 20% growth or higher than 20% growth for Q3?
So for Q3, we were anticipating around 22% growth.
Perfect. So that's a large miss therefore, Kaustubh. Sorry, please go ahead.
But on a normal, quarter, we should expect, growth somewhere around 18 to 20%, and that will be largely driven by store addition, while LFL like for like growth should be in low to mid single digit. Q3 largely because of the festive season, it was expected that there would be some push in sales, and on quarter basis, the growth would be little better, but 17% growth was lower than what we and Street were anticipating for the quarter.
They've gone wrong, Kaustubh.
Sorry?
Where do you think it's gone wrong for them? Because the miss is large, right? So I'm just trying to get a sense, your opinion on where is it that they've really gone wrong?
See, they have done, change in their portfolio. That is for sure. If you go to the, west side or studios, a lot of portfolio change has been done. But I guess even there is a lot of competition which is building up in this space, especially in the value fashion space. So I guess the consumers would also look for the new trials with new brands which are available in the market in the value fashion space. So competition is building up. The demand environment is yet to get that kind of push which is expected. I think these are a couple of factors along with the high base. If we look at the quarter three FY25, the growth was around 37%. So, the base is normalizing, and we should expect, 17% growth is better if we compare it to the 11 to 12% growth, what the overall apparel market or retail market growth is for this quarter. So the growth, the base is normalizing for the company, and on a steady state, we should expect around 18 to 20% growth, unless there is something which is driving really well for Trend in the quarters ahead. Maybe in terms of whatever a portfolio they are having at the store level, or whatever the churning which is happening in their portfolio in terms of new addition or fresh addition to their portfolio. If that is helping, we might see some improvement in the sales. But 18 to 20%, I think, is the normalized growth we should expect for Trade in the quarters ahead.
And Kaustubh, taking a look at how you've rated the stock, you continue to maintain your buy rating, but in November last year, you trimmed the target price of the stock from 6,350 to 5,255. Are you seeing any further downgrades to your estimates after the kind of update that we've received?
See, it depends on how the margin picture would be, definitely in Q3. So, but looking at the numbers, obviously there will be some downgrades. Also, if we look at the store addition number, for 9 months, it is around 90 stores what they are added, including the West Side and Zudio. Traditionally, we have seen Trend has been consistently adding around 200 stores per annum. Last year also in quarter four, there was an exceptional addition in the Zudio's store. So if that might be the case, then we might see around 200 stores addition for FY26. Looking at the current store level or store addition level for this year, I think 200 would be a little difficult. I think they would be close to around 160 to 180 store addition for this particular year.
Okay, and Kaustubh,
So
let's
that
talk.
will again,
Yes, go ahead.
so that so that will again have some impact in terms of the revenue growth what we are anticipating for the entire year.
Sure, okay. And Kaustubh, let's talk about the valuation multiple at which Trent is trading right now. 90 times price to earnings. Yes, it has come down from its high, but so has the stock price. What is your take on where the valuation could settle, and what do you think a fair re-rating for the stock would be, given that the performance is lagging but it's still trading at 90 times?
So I think the stock has corrected by around 45% from its high. Then I think we should expect the time correction to happen considering the performance, because I believe that it will take another 2 to 3 quarters for this base to normalize, and we should expect then the steady state kind of a growth. And I think that would be the point one should look at, what kind of earning growth CAGR the trend would see at a normalized basis, and that would give us some sense on what exactly the valuation the company would be comfortable. But I guess the stock has corrected from its high. I think the long-term growth prospect of the company is intact. The management has not changed their guidance, of 25% CAGR. So definitely, we must look from that perspective as well. What exactly the plans would be from here, to improve that growth trajectory from the company's point of view. So the long-term growth prospects are intact. I think once the base is normalized in terms of the growth, I think we should look trend from the more steady state growth point of view.
Okay. Kaustubh, if one were to say that you revise your numbers, given the manner in which or the trajectory with which they are doing store openings, how much would that revision largely or approximately be? In what range? You're currently penciling in growth of 18 to 20%. In a good quarter, they're doing 17. Does it not concern you that this 18 to 20 may not be achievable? It could be base, it could be various reasons. But is there substantial downside risk to this story, is what I'm trying to understand from you.
So 17% growth, if you look into this quarter, so they have added 49 Zudio stores and I guess 17 Westside stores. So, the on that store addition level, they have done 17% growth along with, along with the growth in their existing stores. So I guess if we consider, similar kind of a run rate around 75 to 80 stores, I think 18 to 20% growth is quite possible. Okay, but if the store additions are higher or lower, then there might be some, uptick or downside in terms of the revenue growth trajectory. Also, how the demand environment is shaping up, how Trend is able to compete well with whatever the new brands which are coming up in the market. So all of these factors are important, in terms of the revenue trajectory going ahead.
Okay, and Kaustubh, you suggested that one of the crucial pieces is going to be margins. How do you expect the margin numbers to play out given the disappointment on the top line? Will that also have an impact on the margins in your opinion?
The last 2 quarters, or first half performance, if you analyze, I think Trend have done exceptionally well in terms of margin, despite the fact that there was a disappointment in terms of the growth. So I think from a margin point of view, they are managing it very well. I believe that margin should remain stable on YOY basis for the company. I think mix is very important in terms of analyzing the margin for the company going ahead. And the Trend has an excellent model, because I guess 95% of their revenues is coming from private label. So I think these are some of the factors which is make differentiating Trends from the other companies, and that's why we maintain our stance that the long-term growth prospect of the company is intact. It is how the growth trajectory of the company from here, which we need which we have to look upon. And if it improves from the current level, I think these valuations will also improve.
And Kaustubh, lastly, just before we let you go, so do you believe this margin figure for quarter 3 could also be in the range of 17 to 17.5% like it's been for the first half?
More or less, it should be in that range.
Okay, lovely chatting with you today, Kaustubh. Thank you so much for your time.
Thank you.
Thanks so much. Okay, viewers, on that note, time to slip into a very short break. Just glancing once again at what the market is doing right now. If there's been any recovery of any sorts on the index, well, not too much. Let's just pull up the Nifty and see what's happening. Further cut, in fact, 0.4% lower and now around that 26,150 mark, slightly below that. On that note, time for a quick break. We'll be right back to talk more stocks on the other side. Back with closing trades, we were just chatting about the direction that the market is taking today, and it continues to be weak. We saw 0.3% cut yesterday, and that cut is further elongated today, about 0.5% cut on the Nifty, and so far it's not shaping up to be a very positive weekly Nifty expiry for us. But let's get a fundamental sense of what to expect from this market move today. We have Mr. Sudeep Bandyopadhyay, market expert, joining us on the show. Sudeep, hi, good afternoon. Give us a sense on the way the market is moving, and not particularly only the Nifty 50 index, but let's talk about some of its constituents. Because on one side, you have a 9.25% cut on Trent, a 4.5% cut on Reliance, but on the other side, you have Apollo, ICICI Bank, HDFC Life and Tata Consumer that are trying to keep the Nifty afloat and trying to do all the heavy lifting. Talk to us about the trend that you're seeing built up in the market right now, especially for names like Trent and Reliance, where the gash seems to be getting deeper by the minute.
I think these are company-specific happenings. Well, Trent, definitely the numbers which came were very, very disappointing. And at that kind of multiple where Trent quotes, there is very little margin of error. The company has been maintaining that they will have about 25% growth, whereas they're consistently below that. Market was expecting 20-21% growth. Now they have come up with a 17% growth number. And this is not a same-store sales growth. This includes all the new store openings. So it's really disappointing. And with this kind of growth, you cannot definitely expect the kind of multiple at which Trent is quoting. So obviously there's a disappointment and market is punishing the stock and is coming down. There are challenges as far as Reliance is concerned, because the oil related scenario is a little fluid at this stage. And I think Reliance had gone up very close to its all-time high, and some profit booking, some correction is happening there. Overall, the market is a little soft. I think the news flow coming from the global markets hasn't been supportive, particularly on the India-US trade deal front. The statements coming out haven't at all reassured the markets about the trade deal happening anytime soon. That's been a disappointment, undoubtedly. Of course, today's market movement, you have to take with a pinch of salt, because today is the weekly expiry, and there are a lot of position shifting which does happen. So I won't read too much into this correction at this stage, but yes, there is definitely company-specific movements happening, which the market is reading as signals for their future performance.
Okay, so that's on Trent and Reliance Industries. Just some more insight on Trent. Like, let's dive deeper into the stock move and understand what some of these numbers mean and what the bigger picture here is. Because yes, we understand this is on the back of quarter 3 update, but let's understand why such a big cut. First of all, if you compare the revenue that the company has logged in the first quarter, second quarter, and of course the third quarter estimate so far, it comes up to about 14,725 crore rupees. Okay, this year-on-year revenue growth has been 19.8% in first quarter, 17.1% in quarter 2, and 17% is the estimate now. So that revenue deceleration still continues. On the flip side, margins, even at that almost 20% revenue growth, margins were at 17.5%. Even in the previous quarter, when the growth was 17%, margins were also at 17%. So this 17 to 17.5% seems like a sticky margin band for Trent. So let's see if in the third quarter also the margins are able to hold on to. Some analysts we spoke to earlier in the day, Jignanshu Gaur of Bernstein, doesn't believe that the margin level could once again be at 17. He sees it slightly lower, but let's see what happens. Now, why these numbers are important in the context of the bigger picture here is that in their AGM last year, Trent in July had said that they wish to clock in 25% annual revenue growth. So far, if you take a look at how the performance has been in the last 3 quarters, they've done 14,725 crores. To clock in that 25% number, this number needs to come in at around 22,000 crores compared to where the 17,500 crore revenue was in FY25. So if you add a 25% to that, this number comes around 22,000 crores, which means they have only 1 quarter to make up for this revenue lag, and this number comes at around 7,300 crore rupees that they need to do at minimum to be able to meet this 25% guidance, which is absolutely unlikely. So does that answer the question if Trent will be able to meet its 25% revenue guidance? Very unlikely that it's going to meet its 25% revenue guidance. Now let's understand what the valuation is. Current consensus 1-year blended forward price to earnings. If you take a look at this number, this is coming at 66.2 times. Right now where the stock is 90 times. So maybe a deep valuation correction is on the cards. The 5-year historic 1-year forward, the blended price to earnings for this stock has been 137 times. And now if you're looking at a 66.2 times figure for the next 1 year, it seems like there is going to be a very sharp valuation re-rating that's on the cards, because there's a 52% difference between what the 5-year historic average is and what the next 1-year outlook is for Trent in terms of valuation. And lastly, talking about what the downside risks could be, it could be sharp moderation in growth rates due to increasing competitive intensity, which is what some brokerages are believing could have been the reason right now as well. Underperformance of stall leading to closures, the way Zudio has been seeing demand. Maybe that if that changes, then that could be a little bit of a headwind. And lastly, sharper losses in the Star Bazaar grocery format could also be a reason why Trent could continue to do bad. But yes, store expansion is going to be the key mode to watch out for Trent. Valuations, of course, and this very key 7,300 figure. If they are able to, by any stroke of luck, achieve this in quarter 4, then and only then they'll be able to achieve their guidance, which Harsh seems almost impossible right now.
Yeah, I think it'll be a lot more than a stroke of luck, and they would have really done something which would otherwise seem very, very unlikely at this point, where revenue is struggling to even hit 5,500 crore. To do 7,300 will be large. But before I take a technical view, here's an ET Now exclusive. The groundwork on India's biggest ever IPO has begun. Sources inform ET Now Reliance Industries is working with 2 investment banks on the preparations for the IPO of its telecom unit, Jio Platforms. We spoke about that, in fact. Ashesha spoke about it as well. And the DRHP filing is expected in the next 2 to 3 months. Anurag Joshi brings in the details.
Reliance Industries is working with 2 investment banks on preparations for Jio Platforms IPO, which is likely to be the biggest ever initial public offering from India so far. Kotak Mahindra Capital and Morgan Stanley have started working on the Jio Platforms IPO, and the hiring of banks and the process of filing the draft equity document with the Securities and Exchange Board of India and the stock exchanges could happen over a period of the next 3 months. So the next 3 months will be very crucial for this IPO. Now, the early indications show that the valuation for Jio Platforms could be at least $160 billion, and RIL will formally hire banks to manage the IPO. This IPO, when it happens, it'll be the biggest ever primary equity raise. In fact, RIL chairman Mukesh Ambani said in August that the group is aiming to list Jio by June this year. And the planned Jio Platforms IPO will meet the threshold of the new minimum public offer norms of the Securities and Exchange Board of India. So the size of the IPO is being pegged in the range of $4 billion to to $6 billion. Looking at the pre-IPO market cap of the company, the valuation of the company. In fact, in 2024, Hyundai had raised $3.3 billion through its IPO, which until now is the biggest ever IPO in India. If you see the revenues of Geo Platforms, it was 36,000 crores in the Q2 of FY26 and the EBITDA margin of about 52%.
Okay, thank you for that, Anurag. And in fact, I wanted to quickly take a technical view as well on trend. Kunal, yeah, I mean, does it look interesting on charts? At what levels? Okay, let me rephrase. At what levels would you start getting interested in trend?
So I think at current levels, I'll start getting interested in trend.
Okay.
There you have it. He's
Perfect.
interested in trend even now, which means trend a good time to buy now.
See, I think over the last 2 decades, I've learned that good price, good news will never come together, right? And when you have such kind of a price damage for trend, just in the last 1 month, the stock climbed 10%, and one day the stock has given up that gains. So maybe it could fall another 4-5%. But whether you're looking at this as a residual sell-off or a last stage sell-off, or you're looking at this as a start of a fresh trend on the downside. Now there could be a lot many extrapolations which may happen, but the stock price is already factored in all of that. It's down 40%, more than 45%, I think, in the last 1 year broadly. So it's factored in that major chunk of negativity right now. And that's why I would believe that the last stage sell-off generally is very high in terms of price action and percentage action, rather than percentage action, but not major in terms of price action. So you look at last 1 month, the stock climbed up 400 points. It's just given away that on a single day. That's why the sentiment is a lot more steeper today. But then price-wise, it's not even come back to the previous swing lows.
Sudeep, at what point does trend become a buy for you?
Well, Harsh, it's very, very difficult to predict at this stage. The multiple at which it is quoting is still very, very steep, and the way the growth has slowed down. I think unless there is something which is dramatic, which is going to happen in the fourth quarter, I would expect another 10-15% value erosion from current levels also, if they continue to perform the way they are performing now.
Okay, Sudeep, thanks for that view coming in. So that's the take on trend. Yes, continues to be as tricky as ever to gauge what would be a good time to enter trend. But Kunal believes now is as good a time as any. But on that note, we'll slip into a very short break. Keep the conversation going on the other side.
Welcome back, and you're watching Closing Trades here on ET Now. We also are joined in by Narendra Solanki from Anand Rathi Shares and Stockbrokers. Narendra, we've firstly welcome. We've had a long, engaging discussion with regard to trend in particular. Where do you sit on this stock? Would you, at this point, buy?
Yeah, good afternoon.
Good afternoon.
Definitely, the headline numbers which you have seen were disappointing, and this has been the consecutive third quarter where the company has underperformed. Now, you have to, from the valuation perspective, you have to see it from where we are coming. So we are coming from a high growth pedestal, which was upwards of 30%, 35% kind of growth. And now we are looking at growth which is sub 20%, wherein the company has guided for a growth of at least of about 25% for this fiscal year. And now in the 3 quarters, we have seen it is well below 20%. So it looks difficult in Q4 alone to company to get to an average of 25%. So I think if you see this kind of a disappointment in the growth, so I think the valuation multiples at which the stock is trading becomes very difficult to justify with this kind of a growth. And I think we have to see how things shape up from here. Right now, it's very difficult, even at this valuations at which the stock is trading at this point in price. So now it becomes a question of what does the management say about in terms of when would they would be seeing a sharp recovery coming back in terms of growth. So until unless we see that kind of recovery wherein the company consistently clocks growth above 25% or around 30%. So I think the valuation at which the stock is trading, even at now, is also would also be very difficult to justify in medium term.
Okay, let's shift focus to pharma. Divi's Labs is one of those stocks which is absolutely in focus. Stock is up 4.5%, so completely different from what we've just been talking about with regard to trend. I'll quickly quote a Citi note which I read this morning. We think 2026 can be an inflection year for Divi's, is what Citi says. Company has strong pipeline catalysts over the next 12 months. GLP-1 is one of those catalysts. Contrast media and some increased capacity of loperamide are some of the other triggers for the stock of Divi's. Besides that, various other custom synthesis products are maturing, is what they're saying, and may also get commercialized in the near term. While the generic segment too is expected to witness a recovery in 2026, the pipeline of products which are seeing patent expiry this year is strong, and which is what they are bullish and positive about. When you're looking at the target price that Citi has given, 9,140 is the target price. So 30% upside from here is what Citi is seeing on a Divi's Labs. And that's one of the reasons why the stock is up 4+% in trade today. Now, first, let me go across to Sudeep. Sudeep, you have a view with regard to Divi's? Do you like it?
Well, I do like it. I think I did also check the Citi note. I think they have painted a very, very positive picture of the prospect of Divi during 2026. I agree to an extent. I think Indian pharma, particularly the players like Divi's, should do well in the current calendar year and going forward as well. So yes, the valuation-wise also there is some upside from current level. It's not cheap, and one cannot look at cheap stocks in Indian market today. So if you are an aggressive investor, you can remain invested for 1+ year. Even now, Divi's Laboratory is a good buy.
Okay. Kunal, what's the view with regard to Divi's on charts?
Yeah, this is a very good breakout for Divi's Lab. I remember, I think, mid of December somewhere, the stock had come back towards 6,550, 600 levels. From there, the stock had corrected 200, 250 odd points, had come back to 6,250, 6,300 levels. But now I think it's made a very good reversal of sorts. So this completes a rounding bottom of of sorts for Divi's Labs. Of course, it's on a shorter term time frame, but this could probably mean that the stock could be good for another 250 at least points on the upside. So would expect 6,850, 6,900 as a near-term target for Divi's Lab.
Narendra, the other set of stocks which were in focus this morning were some of the larger cap banks, and Axis, Kotak and IndusInd, all three came out with numbers. Now, fascinatingly, the numbers from IndusInd were the weakest, but the stock is up nearly 2% in trade. So that's just markets, right? But talk to us about how you looked at the numbers and whether either or any of these stocks are on your radar as picks for both value as well as the kind of growth that they're offering.
I think the overall numbers which we have seen from the private banks especially have been decent. There has been pickup seen in both disbursal as well as deposit growth. So overall sector-wise numbers were good. Now coming to back the performance, I think we like Axis and ICICI Bank as top picks in private banks. And in overall banking sector, we still continue to favor PSU banks over private banks if you talk about the overall banking sector.
Okay. PSU over private. I know Kunal also is of the same view. What we'll do is we'll chip into a very short break. But stay with us here. Tata Motors is the other stock we'll talk about. Stay with us here on ET Now. Oil trades flat with a slight bit of negative bias after the biggest gain in a week as traders weigh the outlook for Venezuela, even as concerns about a global glut persist. Gold steadies after ending 3% higher yesterday as traders look beyond tensions in Venezuela toward a busy lineup of economic data in the US. Traders are turning their attention to a slew of US economic data due this week, including December jobs report on Friday. Copper extends a powerful rally after bursting through $13,000 a ton for the first time as investors bet on a tighter market. 3-month futures surge as much as 2.2% to a record $13,283 a ton in London today. Concerns that the Trump administration may introduce a tariff on refined metal have drawn holdings into the US, potentially leaving the rest of the world short. Goldman Sachs believes that Chinese steel mills could face an extended period of depressed margins as efforts to cut capacity in the sector go slower than expected, even as exports continue to remain high. Palm oil fluctuated as investors weighed burgeoning inventory in the second biggest producer, Malaysia, against prospects for firmer exports this month. Stockpiles in Malaysia were estimated to have climbed for a 10th straight month in December to reach 2.99 million tons, the highest level in 7 years. And let's talk a little bit about the auto major, Tata Motors PV, and it's in focus after JLR reported a sharp decline in wholesale and retail volumes, largely due to production disruptions caused by one of Britain's most severe and high-profile cyber attacks. My colleague Srishti joins us with all of the details on that one.
Well, yes, Tata Motors JLR has come out with their Q3 FY26 updates, and the number seems to be way below than what the street was penciling in, where in this time around, the wholesales number has been clocked at 59,200 units, and that's a decline of 43.3% on a YY basis, and sequentially as well, there has been an 11% decline is what we have seen. Though the analysts were expecting a number above 80,000 of units, taking cognizance of the fact that the company has earlier mentioned that in the quarter 3, there could be a 30,000 of volume hit on the back of the whole cyber attack issue, and along with that, the US tariff impact is something that has been impacting the overall financials of the company as well. And the analysts did make all of these estimates as well as did take note of the kind of commentary that the company has given, but yet again, the company has managed to underperform versus the street estimates. Along with that, with respect to the retail sales data, that has been clocked at 79,600 units, and that's a decline of almost 7% on a sequential basis. It's been a weakness seen across the UK, US, Europe, as well as the Chinese market as well. With respect to their product mix as well, this time around we have seen the Range Rover Sport and Defender accounting to almost 74.3% of the wholesales volume. Though, of course, that is higher versus Q3 of last year, but sequentially there has been a bit of a moderation that we have seen in. So, yes, of course, Tata Motors, the kind of issues that were there for the company, they were well known with respect to cyber attack, the US impact that they have seen, and company has earlier guided that going ahead in Q4, they are expecting the full normalization to kick in, because for now they said that it was only during mid of November that they have seen the operations coming back to the normal levels. But for Q3, a dismal set coming in from Tata Motors JLR.
Okay, Tata Motors JLR. Narendra, how do you look at the numbers? Are you more positive on PV versus CV? We also had the FADA data coming in, where PV volumes, at least in India domestically, looked decent. I mean, 25% growth is more than decent, but those numbers looked quite strong. But CV also looked very, very good. Where do you sit with regard to this debate of PV versus CV, and which pocket would you bet on? Ancillaries versus OEMs versus the others?
Yeah, definitely the auto sector data has been very encouraging, and the overall growth has been better for almost all the sectors, be it two-wheelers, commercial vehicles, passenger vehicles. But in the overall scheme of things, if I have to rank it on the basis of segments, then the first rank would be two-wheelers, and then ancillaries, and then third would be commercial vehicles, and the fourth would be passenger vehicle segment. in that order. And definitely commercial vehicles is also looking great and the growth is coming back. And I think we are almost into early stages of cycle and the high growth period is yet to be seen. And I think next 2 to 3 quarters are going to be very good for the commercial vehicle segment as well. So this would be my play as far as auto sector is concerned.
Let me quickly address IEX because that's the stock which is absolutely flying in trade. Now, APTEL, which is the appellate tribunal for power, has questioned how market coupling rules were made. What they're saying is CERC should have acted quietly and independently. Hearing, of course, is underway. They have said that it has noticed too much theatrics in the making of these rules. So what you've therefore seen as a result is one of the stocks, IEX, which has been languishing for now, I believe, at least 6 to 8 months, has now seen a large spike. We're now at upper circuit where IEX is concerned. And we'll try and get a perspective as well with regard to this. If this were to get reversed, Narendra, how big is it for a player like IEX?
I think it's a regulatory issue, and we have been seeing the company has been struggling because of this since last many quarters, and it's very difficult to actually arrive at any conclusion. So the volatility would continue to persist until unless we see some more clarity and details in the actual jurisdiction. And I think even if we take it as at a face value, so I think this would not be the final settlement of the issue. Then I think this would also linger in and go to the higher jurisdictions. And I think this issue would continue to remain until unless it is finally settled with some higher authorities. So I think initially we might see some kind of a relief, but I think this would continue to remain to keep coming back, and volatility would remain higher for the stock in the medium term.
So the appellate tribunal for electricity making it clear that that the tribunal itself is not very happy with the way these rules have been made, and therefore you're seeing now a 12% jump on the stock price of IEX. What are you seeing on charts, Kunal? Stock would have flown, but talk to us about your observations, how contracts in terms of pricing has shifted.
Yeah, there's been a major jump in the F&O side trading for IEX in the last 15-20 minutes when this news has come. The options activity is also very, very encouraging for IEX. The best part is that as of now, if the stock closes at 152-ish kind of a zone, this could probably be like a 4-5 month of a swing breakout for IEX, and that I believe could probably itself propel the stock price further going forward. So it's of course a very initial kind of a price action. The stock price generally settles after this kind of a flurry in terms of an uptick. But assuming if the stock holds on, say in the next couple of days to that 152 range, we could be looking at a fresh breakout candidate in terms of the PSU name.
Well, on the back of that, IEX is absolutely flying in trade, 12.5% higher. So very, very strong in terms of the move there. Narendra, we were talking about pharma a few minutes ago. How do you view the pharma basket, and where within pharma are you finding favor or value?
In pharma overall, we have been positive since long in the hospital segments. Now, in pharma drug segment, we have a view that there's a very limited downside risk, and the sector should turn around in a quarter or so. Now, considering the GLP-1 opportunity, I think our top three markets, Brazil, India, and Canada, are going off patent in Jan and March. So the new launches in GLP-1 is one of the key factors which the markets are waiting for the data and see how things go there. So this opportunity definitely is a very big opportunity, and these three markets are very big, and it should provide significant run-up in the early calendar year 26. And going down the line in the remaining part of the calendar year, we see a lot of opportunities in generic 2, which is the complex generics launches happening over there. So this should also support the sector overall. So I think here, even in the drug manufacturing companies, the downside is limited, and we can start stock-specific pickings for medium to long term.
Okay. In fact, let's go across. We have Charu joining us at this point. Okay. Okay, Charu will take a minute to join us. Let's wait for her to patch in, but this looks considerable in terms of the move. Just the manner in which the stock has moved, it seems that this could be big with regard to where IEX is concerned. Narendra, just very quickly with regard to sectors, pockets which you are liking at this point, let me throw it open. What are you liking? Anything that has decent value on the table at this point? We're at or very, very close to life highs. So trying to get a sense from you over the next 12 months. What are your top bets?
In terms of sectors, I think we continue to continue to remain positive on autos, auto ancillaries. Metals is another space which is very interesting, although it has run up. We have seen a lot of rally in this space, but I think commodities are on a tear, and I think this year may be year best year for the commodities. So you can we are still positive on the commodities. Plus, domestic manufacturing space wherein we find good stock-specific opportunities are some stocks in defense sectors. There's a huge opportunity. You can find bargains over there. Then obviously in healthcare, hospitals is one of the segments we are positive on. We are neutral to positive on pharmas, wherein stock-specific opportunities are lying there, aligning with the new launches, GLP-1 opportunities. And then the financials, we are positive, wherein we prefer overall from the financial price, we prefer NBFCs as at this stage, and in banks, we prefer PSUs.
Okay, all right. Now let's switch focus to consumer durable companies. They're hiking prices due to input cost surge. ET now learns that several consumer durable companies have hiked prices across ACs, kitchen appliances and cookware to protect margins as copper costs have surged nearly 40% since the month of October 2025. Anjali Palod joins us with all of the details with regard to this. Anjali, what do you have for us?
So consumer durables is where we are seeing the impact of the surge in copper prices, wherein companies are hiking prices for ACs. We're seeing price hikes in terms of kitchen appliances, mixer grinders, fans, as well as certain cookware. Now this is on the back of the copper prices surging over 40% since October, and the price hikes we're seeing is in the range of about 5 to 8%. For example, if you look at Wonder Chef, they've hiked prices of about 70 to 80% of their products since January 1st, and these price hikes have been in the range of 5 to 7%. At the same time, we're seeing Godrej Appliances, which has said that they are going to increase prices of all the newly produced ACs by 7 to 8%. However, the input costs have surged by a larger amount in terms of Godrej Appliances, where they've seen the input costs surge by around 8 to 10%, and the price hikes are in the range of 7 to 8%. At the same time, we're learning from sources that some smaller brands are replacing copper with cheaper materials like aluminium in motors, given the surging cost. But at the same time, aluminium prices have also been surging. So all of this, the general increase in commodity pricing is what is translating into higher prices for the consumers as well. And what we are also learning from sources is that apart from these two companies, there are several others that are going to be increasing their prices in the coming months as well.
Thank you so much for that, Anjali. That's great perspective, and it's obvious, right? If copper prices go up by that extent, ACs are going to get expensive, Kunal, so that is likely to play out. By the way, do you have a view on copper?
On the copper as an asset class?
Yes.
I think we are into a new orbit altogether for many of the commodities. I don't want to call it as a super cycle uptrend because it's been throughout various asset classes, but yes, there is a major cyclical uptrend which is going on across major asset classes over here, and especially focused on the commodity. And it doesn't look like that we are looking at a major halt into this kind of a rally in the very near term. Historically, the best periods to watch out for these metal/commodity themes was in 2005 to 2008. I think that was a period where metals, commodities as an asset class gave phenomenal returns, and so was the case with many of the metal and commodity related stocks.
Okay, so that's with regard to metals and commodities. Kunal, you are noticing something on IEX as well.
Yeah, so when the move started off for IEX, that 160 call option, which was almost at 45 to 50 paise, that became 5 rupees. So it's almost 10x jump
Wow.
in the option. And just the moment the news actually came out for IEX, the option price was at 1.5. That 1.5 became 4.5 to 5 in a matter of, I think, just 10-15 minutes.
So now the 160 option is priced at 5 rupees.
So it's almost at 4.4. It's settled at 4.4 right now, but the 5.83 was the high for the option.
Wow, okay. Well, still some more move left or not. We'll have to obviously play that by the ear, wait for the entire hearing to get over and that entire verdict to come through as to what the APTL tells the CERC in terms of this regulation of decoupling and what impact that has on IEX. We will only get to know post that. But for the moment, directionally, it seems that IEX will likely find favor in that hearing and in that verdict that will likely come out. So yes, you will have IEX in focus. If I can come back to you, Narendra, with regard to some of the consumption names and consumer durables in particular, we spoke about how copper prices going up could be a concern. This year, the summer is expected to be warmer, which means that a lot of the AC manufacturers as well as a lot of the refrigerator manufacturers could well benefit, but pricing going up is a concern.
Yeah, definitely. I think the companies should be able to pass on the prices. See, ultimately, what happens is that most of the companies actually run with a model wherein they hedge the prices on the spot, so whatever they are producing. And if there are any discrepancies, they tend to pass it gradually to the customers. So until unless we see a very sharp runaway or very volatile moves, so I think the companies would be able to pass on the prices. Now coming to the copper specific thing, so herein I think one aspect we have to look at it. In electric appliances, there are two categories. One is premium category and one is below premium category. So most of the companies who are manufacturing below or who are manufacturing or selling products into a sub premium category are already using alternatives to the copper to a very large extent possible. And while this copper issue would be majorly impacting the companies who are producing and selling items in premium categories, because that is where you have to give good quality product and efficient product or something like that. So in segment wise, I think premium category would be seeing some kind of impact, but largely the companies would be able to pass on this.
Okay, so that's with regard to consumer durables and especially with regard to what copper price increase could well mean. But we'll go across. We had a conversation with MV Photovoltaic, and this is a company where Jefferies initiated coverage and gave it a 70% upside. The stock was up 10% in the morning. So even post that, you still had an upside of nearly 60% left, or rather 7 to 8%. You still have a 60% because the target price is 320 on this one. We spoke to Suhas Donti, who is the CEO of the company, over the outlook, the order book, and more. Listen in to a slice of that conversation.
We have an order book of 5 gigawatt as of September 2025, as of the last quarter. And this is an order book that is to be executed in the next 12 to 18 months. And if you see, it is a very healthy order book, roughly around 8 to 9,000 crores would be the revenue for the 5 gigawatt that you typically would come. 6 gigawatt of the expansion that we have planned, which was part of also our initial plan when we were coming into an IPO, where we have already secured the land for. This line is to be executed by March 2027, and that is the end of financial year 2027. And this basically is a project of 5,500 crores. And we have the necessary funding already in place, and the project is moving in the right direction.
Right. So that one was a buzz in trade. This one trades at 23 times. Narendra, your view with regard to a play on the solar space, on the solar power space, I beg your pardon, and is this something that looks good to you?
I think overall, we do not have any recommendation on this specific stock yet. But overall, the space is, I think, very tightly run by the government-backed projects. And as far as the government's commitment is concerned in terms of renewable energy sector, so we see a medium to long-term growth traction being there from these in solar as well as other clean energy sector. So overall, the growth in the sector would remain high for medium to long term for next 3 to 5 years. So there is no doubt about it, and we have seen a lot of very large target has been set up by the government in both clean energy and renewable segments. So I think the sector would be growing, and we are positive on the overall sector.
Spoke to another big mover in trade yesterday, which has also turned out to be a big mover in trade today. CSB Bank, they came out with Q3 updates. We caught up with the Managing Director and CEO, Mr. Pralay Mondal, to understand his loan growth guidance and what we can pencil in terms of the guidance going forward. Listen into a slice of that.
LDO will not impact our loan growth. And we, of course, will not take any liquidity risks, because when you're growing by 29% this quarter, last quarter also we grew by similar kind of a number, but our guidance is between 25% and above. So to that extent, we have fair bit of margin between what we are kind of guiding the markets or straits and vis-a-vis where we are today. So we don't have that challenge at all.
Kunal, how are you seeing this one on charts? The kind of move yesterday plus the kind of move we've seen today. I'm trying to get a sense as to how do you, I mean, I know it's a relatively very small bank, but how do you view it?
No, I think on yesterday also when the stock was up some 5-6%, we were discussing that that the stock is getting into an extreme. Even though the long-term charts are now looking a lot more stronger for CSB Bank, but then buying at an extreme even on a short-term time scale is not a good strategy, because you'll have to wait out for a point where the stock goes into a sudden bout of correction, and that correction phase has started off for the stock price right now. I would wait for a few more days. I would not jump into the stock price as of now, even after this 3-4% correction for the stock. Maybe I think if it settles down to say 480, 460 kind of a mark, that could probably be a point where traders could get a little bit more interested, but not at current levels.
Okay. Narendra, some of the small cap banks, are they likely finding favor in your list of stocks to buy?
I think in small caps, we prefer, as I said, PSU banks. So banks like Bank of India have been performing really well. Indian Bank is also another bank. So these two banks, we are positive in terms of small cap banks.
Okay. Now, very quickly, Charu is obviously feeding us with information with regard to that IEX hearing which is happening. And what she tells us is IEX wants the CERC, and this is submissions on behalf of IEX. So this is IEX's arguments at the APTEL. They're saying that IEX wants the CERC order on market coupling to be cancelled. It's saying that it also asks that the order should be put on hold with a stay until the case is decided. They're saying that the exchange said coupling will harm exchanges instead of encouraging them. IEX argued this move goes against the original idea of supporting power exchanges. It said even under an antitrust style approach like in the US, this is not the correct method. They submitted that there is no need for such a coupling order by the CERC. There is a need to further examine the shadow piloting of market coupling. The feasibility of coupling, including contingency contracts, need to be examined further. Grid India should work on shadow piloting for these aspects, and public consultations should take place. With regard to the question on SEBI investigation regarding insider trading by CERC officials, the bench raises questions on allegations that the order was given to affect the market. APTEL asks the stage with regard to a SEBI investigation. Well, there's plenty happening with regard to that hearing, and we're trying to cover it as best we can. But the stock has now cooled off from the highs of the day. From 12% higher, it's currently just 8.5% higher, but that's still a significant jump in terms of the stock price. So that's how we've seen the play happening with regard to IEX. Now, let me go across to Ashesha, who's standing by with regard to all that's happened in markets today and how the closing trades are playing out. Ashesha.
Well, yes, Harsh, turned out to be another soft day for Indian equity markets. Nifty is ending with a decline of nearly 70 odd points as we speak. 26,177 is where the Nifty is trading currently at. Nifty Bank, though, outperforms as compared to Nifty, that one seeing a marginal increase of about 60% for the day's trade. In terms of individual sectors and stocks, Keynes Tech was one counter which was declining in trade. In fact, we saw that sharp dip come in the last 1 hour. Keynes Technology for you down 5.5%. IEX on the back of that news that came in with respect to the government order or the court ruling rather, the stock up 9% by the end of today's trading session. In terms of other individual stocks, let's put the spotlight on the healthcare sector because the entire sector was buzzing in trade today. Divi's Laboratories, remember Citi had come out with a very bullish report on Divi's Laboratories. Healthcare index ending the day with an uptick of nearly 2%. Divi's Lab up 4.5%. Max Healthcare, Apollo Hospital, Cipla, all of these stocks from the healthcare sector were doing very well for themselves in trade today. That's Max Healthcare for you. Some of these other stocks should also come up for you on your screens. Reliance Industries, meanwhile, was in focus today on the back of several news pieces. Big boy Reliance Industries was also declining in trade today. In fact, it is the day ending the day with a decline of nearly 4.5% today. Pharma stocks were doing well, but apart from that, South Indian Bank was another buzzer in trade today. It should come up for you on your screens. Something like Hindustan Copper on the back of surge in copper prices in the global market. Remember, copper has now crossed that $13,200 per ton mark in the copper market. That one ending the day with an increase of 2.5%. We also had Bajaj Auto, which was bucking the trend. Moil and Trent on the back of operational data that the company reported for the quarter gone by. Trend should come up for you on your screens. Moil up 3.5%, very strong operational data. Trent on the flip side, though, it missed street expectations. Growth was slow in the quarter gone by. 8.5% shaved off on that counter. Meanwhile, KSH International, small counter, but again reacting to the operational numbers. That stock was up 3.5% in trade today. Meanwhile, Eternal was in focus on the back of a block deal that took place. So yes, a whole host of buzzers from the broader markets. We had several individual stocks which were reacting to their operational updates. But on the index level, Nifty ending below that 26,200 mark. Nifty Bank, though, marginally outperforming in trade. Harsh, back to you in the studios.
Okay, thank you so much for that summary, Ashesha. So we've closed around 76 points lower, Kunal. And what needs to be kept in mind is the same thing that we started the day with. 113 points lower on, or rather 113 negative points contributed by Reliance Industries and 45 negative points contributed by HDFC Bank. Both of those sitting on the red side of the fence. But even broader markets, even the breadth was under a bit of pressure. Talk to us about how you would sum the day up, a day like this.
See, I think it's too much of pain in the large cap names, but then no major impact, at least in terms of the index movement. I'll consider this as not negative, not positive for the index, maybe more of a balanced reaction, because it's bound to be, a mature market is a sign of a mature market is when there is pain in certain sectors and some extreme pain in certain sectors or certain large cap names or certain stocks, it generally gets balanced out with some other sectors or some other stocks trying to make a comeback. So today we can look at the spectrum as half glass full. That maybe you have Reliance, Trent, etc., which was trading down. But the other way to look at it is that the pharma stocks, FMCG names, these stocks made a very strong comeback for themselves. The IT index has made a good comeback. So maybe the market tilt is getting a little bit more towards the other side of stocks, ones which have not been participating for the last 3, 6, 5 months, broadly. So maybe the tilt could be shifting in that regards.
And pharma could well be the beneficiary, Kunal?
Yeah, I think pharma and FMCG, I think you look at the kind of stocks which have given breakouts. HUL was almost at 2200 levels a month back. Now the stock is at 2400 mark. So such kind of a strong, steep 10% kind of a recovery in a matter of, I think, few odd days tells you that the market is getting tilted towards these sectors.
All right, Kunal, thank you so much for all of your views. We'll let you go and we'll see you tomorrow morning, of course. Viewers, thanks so much for tuning in. That's all the time we have on Closing Trades today. And from everyone who puts this show together, thanks so much for watching. Stay tuned to ET Now. More action on the other side.
Presented by AGS Federal Life Insurance. हर